Welcome back in, Dividend Growth Stock Investors. You got Colby, the DGI Crab here, and today we're going to do the final video here in this series, the bubble stocks for Tier 4 investors age 54 and up. When I was putting the content for the channel together, I narrowed down the list of stocks to focus on to 60 dividend growth stocks and then broke those down into 4 separate tiers based on age range. Now, investors age 54 and up are the smallest tier of stocks in that category. They have just 10 of the 60 to focus in on. Big part of that is that investors age 54 and up need a higher starting yield, but I also don't want to sacrifice year-over-year annual dividend growth rate either. And there's just not a ton of single stocks out there that meet that criteria, that have the high yield, the growth history, and the growth rate, not to mention market cap, that I'm looking for when I put this group of 60 together. Now, when I started out, I've had a list of more than 250 dividend growth stocks. I had the kings, I had the aristocrats, I had the stocks in the S&P 500 that pay a dividend. I had stocks that I'd seen covered on other YouTube channels that I thought were interesting and deserved a spot on my watch list. And then as I was narrowing down the list, I got to about 100. And then at about 100, it got really difficult to continue to remove names from the list when trying to make the amount of stocks covered on this channel for investors to focus in on a bit more manageable. So this is the list of stocks that would have been in the Tier 4, age 54 and up. But they're just on the outside looking in, but they are sitting here waiting in the wings, just in case it ever comes a time I need to replace a stock in Tier 4 due to a slash dividend or some other reason. So I'll be interested to see if any of you own any of the stocks covered here on this list today, and if you think any of the ones I include here should have made the final cut in the Tier 4. Before I jump into the list, I will just say I'm not a licensed professional financial advisor, and the opinions expressed in this video and the strategies as well are just this one crab's opinion and strategies, and you should always do your own due diligence before investing in any stock, security, or ETF. All right, everyone, let's jump right in. So the first one off the bench would be U.S. Bancorp, stock ticker USB. USB is the largest regional bank in the country. This was an extremely difficult one for me to keep off the list. They're sitting on 13 years of dividend growth, but this is a company with a pretty solid track record of having a yield in the high 3s to low 4s and a 5-year growth rate in the 5 to 7% range. It is partially, it looks a little like a Tier 3 stock in some ways, a little bit like a Tier 4 in some other ways. It's kind of a tweener in that regard. But certainly a fine bank stock, one that I definitely like and have owned before. I don't currently own any USB right now, but this would certainly be one that is just right there on the edge, right on that bubble on the outside looking in. And if I needed to replace probably any of the stocks that I have in Tier 4 right now, this would probably be the first one I would choose to go in and replace it with. What do you all think of US Bank? Next is International Business Machines Incorporated, stock ticker IBM. Man, it's hard for me to know exactly what to do with IBM. So they're higher yield for a tech stock, certainly. They're typically going to yield in the mid 3s to maybe low 4s, sometimes even higher than that. The last few years I've seen them get up into the 5s. Their 5-year growth rate is not the best. I mean, we're just looking at maybe about 2%, and they do have a 24 year streak of growing the dividends. They're about to be a dividend aristocrat. They've got a major market cap. It's a super recognizable company. And it would be nice to have some tech exposure, especially if you're an investor that's just starting out at age 54 and you didn't have time in your investing career to pick up some more exciting higher growth tech opportunities. But yeah, with IBM, I think the dividend is safe, but I don't think it's going to grow very quickly. If you can spot it on sale and pick it up with a yield well above 5%, then hey, there's probably a lot worse things that you could spend your investment dollars on. But at the end of the day, IBM, I think, is a quality company. It's a nice stock. It's just was one that was hard for me to know exactly what to do with it as far as where to place it. Next is Lyondell Basel Industries, stock ticker LYB. So Lyondell Basel, pretty good sized company. They do packaging and let's see, plastics, and there's quite a few different things that Lyondell Basel does. It's an industrial. It has a nice dividend yield, usually in the 5%, and a pretty decent history of growing the dividend. They're in that 4 to 5% a year category. They've only got a 10-year history, though, of dividend increases. And while that's certainly not bad, I think for the 54 and up investor, I'd just like to see a little bit more history built up on those increases before I would feel super comfortable having it on a list for investors that are really trying to bridge the gap between like collecting Social Security and current day trying to retire and live off of dividend income. Next is Black Hills Corporation, stock ticker BKH. I really like Black Hills. It's a dividend king with 52 years of dividend growth streak. And it's just another one of those utility companies where it's going to be a nice steady Eddie player. It'll yield around 4%, maybe in the high threes, get you a 5-year growth rate, usually around 5%. So, definitely a lot to like as far as that goes. It's just got a bit of a smaller market cap and just the numbers are solid, but with their smaller market cap and just okay so yield and growth numbers, they just didn't quite make the cut. That's why they're on the bubble. Next is Franklin Resources Incorporated, stock ticker BEN. This is one that it's an asset management company. Usually it's going to be yielding in the high 4% range, I would say, with the 5-year growth rate about that same range in the high fours. So an okay combo factor there and a manageable payout ratio. And this is another one of those where I had to check Seeking Alpha. They didn't have the dividend growth in there correctly. I knew 0 years was not correct, so I had to go and double check that. And just to make sure, and Franklin Resources is a dividend aristocrat. They have a 44-year streak of increasing the dividend annually. So I did verify that for everyone here. Good quality company. Nothing wrong with owning some BEN, especially when you can get it on sale. A lot of the numbers there add up to me, but just again, these are stocks that are just right there on the bubble, and Franklin Resources didn't quite make it for me. Next is Pfizer Incorporated, stock ticker PFE. Pfizer hasn't cut their dividend in 30 plus years. They only have a 13-year streak of dividend growth, but they've been very stable in terms of maintaining their dividend throughout the years. Recently, a few years ago, they did a spinoff and spun off another company called Viatris, VTRS. And when Pfizer did that spinoff, they still did not end up cutting their dividend. They even grew it that year. So Pfizer, I'm not sure how long they're going to be able to maintain that. As of the date of this recording, their payout ratios gotten pretty unmanageable. We'll see how they handle that moving forward. But a lot of the times with Pfizer, you're going to get a 4 to 5% yield and a 4 to 5% growth rate. And it's certainly a massive player in the pharmaceutical space, household name, and it's just, again, for single stocks, I need to have a really strong growth history and not be concerned that there's going to be any dividend cuts coming in the future to make that tier 4. And with the Viatris spinoff and the payout ratio getting really high, I'm just not super confident that there's not a dividend cut coming for Pfizer pretty soon. And I really didn't want to start the channel off and go 3 months in and have a dividend cut immediately in one of the tiers and have to rethink a stock. So Pfizer is sitting there. I'm very much aware of it, and we'll see if it eventually works its way in. But for right now, it's kind of a wait and see for me. Next is Philip Morris International Incorporated, stock ticker PM. Philip Morris, the competitor to Altria Group, stock ticker MO. Altria did make the final cut because it's got a higher starting yield and a similar growth rate. But Philip Morris is pretty stable as well. You're usually going to get a dividend yield in the 5-ish% range, 5-year growth rate at 2 to 3%. Philip Morris has a 15-year history of growing the dividend, and um, if you don't have any problem owning, what do we call this, a sin stock, right? Owning a cigarette company stock, then you could certainly do a lot worse than Philip Morris if you're seeking current income. There was a stand-up routine from Dennis Leary back in the day who said you could continue to increase the price of cigarettes year after year after year, but to get people to quit smoking, but smokers will just eat less as opposed to quitting. And that may be true. But Philip Morris, good stable company in terms of the dividend yield and slow but stable growth rate. But at the end of the day, I like Altria better as a stock, and Altria made it over Philip Morris. All right, and then we're going to wrap this up with a series of REITs, which are not going to give you qualified dividend income. They will be dividends that are taxed at ordinary income rates. Now, I'm not as concerned about that once you hit that age 54 and you're trying to build up that dividend income to retire off of. And also, if you are investing in REITs in a Roth IRA, that's what I do, because the dividends that I'll collect from those REITs will be tax-free. So, buy REITs, just knowing that the taxes are a little bit different. But here's some REITs that didn't make it in. The ones that did were Realty Income, NNN Properties, and Essex Properties. But here's a series of REITs that I am quite a big fan of. You have Mid-America Apartment Communities, stock ticker MAA. Solid yield and 5-year growth rate. The AFFO ratio is very comfortable, and they've got a 13-year track record of growing the dividend. I like what they do with the apartments and the part of the country that they're in. I think there's a lot to like about this one. Next is Vici Properties, stock ticker VICI. This is the company that owns practically all the casinos on the Las Vegas Strip. So there's a lot to like there as well. I don't think Vegas is going to have any trouble bringing in all kinds of money in good times and in bad. I like the yield and the growth rate combo, but they don't have the history built up yet. Just 5 years of dividend increases. I want to wait and see a little bit more out of VG before making the commitment to put them in one of my tiers. Public Storage, stock ticker PSA. So this company, I put a note in here. They've only have a 1-year dividend growth. That's a little misleading. They did a big time special dividend about a year ago and then didn't the year after. They've never cut their dividend. And this goes back to the 90s. Super stable company. They don't always raise the dividend, but storage space, we're just talking about such a low overhead type of industry to be in. I think public storage is going to be an income generating beast for a while. Very close to making the cut, but the inconsistency of the growth rate was the main reason it didn't make it. Agree Realty Corporation, stock ticker ADC. A lot of people think of this as the little cousin or the little sibling of Realty Income. It's a very similar company, monthly payer, similar stats. Agree actually has a little bit better track record of growing the dividend in recent years. They've done it a little bit more, but if I have to pick one or the other, I'm sticking with Realty Income. Alexandria Real Estate Equities Incorporated, stock ticker ARE. They have office space, and primarily they are focused in medicals, like laboratories and medical facilities. 13 years of dividend growth, nice yield and growth combo factor. Again, this is just another one, kind of like MAA. I like the stock, but I need a little bit more history built up. And then finally, Federal Realty Investment Trust, stock ticker FRT, the only king REIT at 55 years, but miserable growth rate. So that's the list, everyone. Thank you for tuning in. Email me your questions at DGICrab, and I'll see you on the next one.